Thanks for staying with us at Bloomberg, Quint. Some focus on the equity markets. And before I dwell into all that's happening in the equity and the money markets, just a quick mention of the volatility as well. India VIX has slipped quite considerably in the session today. I think 12.5 to 13% kind of a fall in India VIX in the session today. 17.95 currently. Remember, had about 20 marks, wherein a lot of people had said it's sustainable. This is, of course, the correlation chart, and it just shows how India VIX cooling off and the resultant impact that it's had on the benchmark indices as well. But this was a matter of time before this happens, and it's happened today. Let's just see if it stays status quo or there is a further pullback in VIX over the course of the next few days. But a sharp bout of recovery in equities, at least. Actually, even the Indian currency has recovered from the morning weakness. Ira Duggal, Darshan Mehta, Yatin Mota come in to take us through the entire piece of recovery. Ira, over to you first. Indian currency also given up some of the opening weakness. What's led to this?
Okay, I'm going to start with actually bonds more than currency, because the logic doing the rounds in the bond markets is, makes a little bit more sense than what's happening in the currency market. So you'd gone to 770 on the 10-year, you have rebounded to 760, so near about flat. The thinking in the money markets or the bond markets right now is that perhaps speculation, but perhaps with Urjit Patel gone from the Reserve Bank of India seat, maybe there will be easier liquidity conditions which will be brought in. The board meeting, if it happens later this week, was to discuss liquidity issues again. So one round of conversation doing the rounds is that there will be more liquidity thrown into the market. That will be positive for bonds. The other round of conversation, less believable, but still conversation doing the rounds, is that Urjit Patel was very strong in terms of the monetary policy outlook that he held, and that obviously influenced the kind of position that had been taken by the RBI members on the MPC. So perhaps the balance on the MPC will also shift should you bring in a slightly more dovish governor, especially at a point of time like this when inflation is soft and an argument can be made for at least a change in stance, if not, opening the room for rate cuts a little bit lower down the line. So that's the thinking going on in the bond markets, which, has some logic to it. In the currency markets, in the morning there was some intervention, so that stemmed the fall for sure. But not sure if the intervention was large enough to see this complete recovery. But if you look at what is happening in the NDF market, you'll see that the offshore market has actually not recovered as much as the onshore market has recovered. The reason I make that point is because in all of this, the important thing will be what foreign investors are going to do, both in terms of selling in debt markets and in equity markets. After a positive month in November, December has been just about, on balance. So the currency reaction perhaps is a little bit of reaction also to what's happening in equities in the near term, but the bond market seems to be taking a view on how policy will change post a new governor coming in.
Well, 7.60 for the yields, and the currency after that big bout of recoveries also cooling off a little bit. Ira, thanks for putting that into perspective. Now the equity markets, and let's talk about one, what the indices are doing and what are some key monitorables there, and two, what specific pockets within the indices are doing as well. Darshan and Yatin join in for that. Darshan, to you first, and what stood out on the index movement?
Yeah, so basically it was a gap down opening considering what happened on the RBI front, but then there was this big recovery. 150 points from the day's low for the Nifty. Close to 450 points from the day's low for the Bank Nifty. Again, they have corrected, and the entire thing remains that, one state, Chhattisgarh, has been lost, but there is still no clarity on Rajasthan because the gap is narrow now. Congress still don't have the majority mark, and it keeps on swinging between the Congress and the BJP for MP. And when the news came out that probably it's neck to neck for the BJP and MP, the index managed to rally. One sector that's doing well is the Nifty IT, which is up almost 1%. The way the rupee has moved, that has benefited. And the other sector that's doing well is the pharma space. Dr. Reddy's is trading close to record highs. Two indices which actually reacted much ahead of the Nifty moving and have managed to stay in the green. It's the mid-cap index and the small-cap index. So despite the Nifty being all over the place and now coming down into the red, the mid-cap and the small-cap end of the market is doing well. Oil, real estate and banks, these are the three sectors that continue to decline. So there is traction on the negative side in all these sectors. Oil and gas is down almost 1.5%. How are you looking at the F&O side of the market? If you're looking at the Nifty, basically at this point of time, some bit of fresh short positions are taken. Open interest build-up of almost 3%. That's something that we're doing, but we are below the crucial 10,500 mark in trade. The Nifty Bank, again, there is a traction that's happening there on the short side. 18% open interest build-up, that too on the short side. Now, where are positions being taken? If you see where open interest build-up is clearly being seen, and there is where you can make out where we are seeing we are below the 10,500 mark in trade. Again, put writers have started writing in at the 10,500 and 10,400 mark in trade, anticipating that there will be support at that level, and call writers are active from 10,500 to higher levels. So where are positions being taken now at this point of time? You could see that it's the call writers that are active from 10,400 to 10,600, but nevertheless put writers are writing in from 10,600 to 10,500. So the bulls are offering a little bit of support as far as the markets are concerned. Stocks where open interest build-up is high. Again, Chennai Petro open interest build-up of 24% on the short side. BEML is seeing short side, but the others, Godrej, SRF and Colgate, are seeing fresh longs on decent open interest build-up. And in terms of open interest declines in the counter, which is either seeing short covering or long unwinding, you can see that Karnataka Bank, HCL Tech, as well as Adani Enterprises are seeing short covering currently.
Oh, interesting. Thanks for putting that into perspective, Darshan and Yatin. Specific stocks which are standing out in trade today.
Well, let's start with the financial services space because we have two news. One is regarding the RBI governor as well as the election outcome. So in terms of reaction, few NBFCs and banking stocks are extremely doing well. In fact, if you look at the beaten down ones, be it Yes Bank or Diwan Housing, the perception is that since the RBI governor is gone, there could be some further room for better liquidity and better news for all of these stocks. So Diwan Housing and Yes Bank 5% each for both of them on the gaining side. Also we have stocks like M&M Financial, Power Finance, Diwan Housing. In fact, Indiawul Housing also has snapped the 4-day losing streak. So all of these stocks are doing well. So be it the select banking names which are beaten down or the NBFC space, everything is doing well in the marketplace. And as Darshan was mentioning earlier, Pharma as a pack is doing extremely well. In fact, the Pharma index is the top gaining index this time. And if you look at the gainers, we have Strides, Shashun, Sun Pharmaceuticals, all of these stocks bouncing anywhere between 6.5% to 5.5%. Also, we have Dr. Reddy's, which has hit a fresh 52-week high in trade today. And also, we have Sun Pharma, which is trading at a 4-month high level. So clearly, the bounce back for Sun Pharma is quite sharp. Also, as Darshan was mentioning, IT stocks are quite active in trade. And not only that, the mid-cap IT end is doing fantastically well. We have stocks like NIIT and Hexaware gaining 4% each on good volumes, and also they're quite active on the future and option segment. However, on the flip side, we have the oil marketing pack because of the kind of election volatility that we have. Speculation is again there in the marketplace and in the dealing rooms that oil prices might see some sharp cuts and probably might have some impact on the fuel retailers like IOC, HPCL and BPCL, all of them down anywhere between 2.5% to 3%.
Yeah, then thanks for putting that into perspective as well. So that's the nature of trade right now. If we can, just before we take a break, want to pull up the turnover in the session today. I think it'll be important at the end of the day today to see how the flows have shaped up, to be honest. But an indication of what the flows could be could also be in the turnover. Now, critically, the F&O volumes have perked up dramatically. We haven't seen that much of a pickup in the cash market volumes, so they are okay. But the F&O volumes at 7 lakh crores is pretty interesting. This is nowhere close to any kind of weekly expiry or monthly expiry days, and yet we are already at about 7 lakh crores, which just indicates the kind of trading activity that has happened in the session today. VIX down, trading activity heightened in the markets of the day's lows. Well, an interesting reaction to the markets currently. Let's wait and watch if this lasts. Take a break. We'll be back with the entire political coverage in just moments from now.